Okay, let's go to slide number set 2, that is money 1. I hope you have the slides with you. Can you hear me, please? You have to talk, please, because I can't see your screen now because I have opened another screen for my slides. Can you respond, please?
Yes, sir.
Right, okay. Now, can you go to the page on digital money? We were talking about evolution of money and how money has been evolved. We discussed from the barter system, from paper currency, commodity money, paper currency, fiat currency, checks, and to up to e-payments we covered. And I was discussing something special in terms of in the modern era, some form of e-money, that is digital money. Now, in the current context, digital money is the most important stage of evolution of money. I told you last week, because of the change or the rapid evolution in technology as well as information technology, communication, and also due to the rapid progress or the advancement in payment systems, now the digital money has become very popular. Now, if you go to the next slide, evolution of money, digital money, second slide, there you have some information given on the digital money. We are going to spend some time on this slide, and because we see in recent papers there are some questions or some increased attention to this type of money. So we are going to have some additional discussion also. Probably you need to have some additional notes. So you have, I hope you have some paper and pen with you. Uh, then you can have some additional notes. While I'm teaching, I'm trying to fix this. So here and there you might see some keyboard uh, noises, right? But I'm trying to get that back in my other computer. Okay, now digital money, as I said, it's a some form of electronic money. Electronic money, for example, if you take a credit card or a debit card or some electronic fund transferring, there what we have some electronic impulse is sent, and through those electronic impulses you share information and you give signals to do a transaction. When you talk about digital money, there we have some kind of a some computer system is also linked to digital money, because some of these digital payments or digital forms of money are directly happening through the computer, or sometimes you simply download money to your computer to do the transaction. So in that sense, the computer technology could be some other thing, it not exactly be the computer, but the principle of the computer could be or is used for this digital money. So as a result, the form of electronic money used to pay for goods and services most often through the internet is considered as digital money. The importance of digital money or the significance of digital money is it allows instantaneous transactions. Now, you can do transactions without any delay, very sudden. And also you can do transactions without having any consideration of the borders. So which means borderless transfers or transactions can be done using digital money. Now, these are not controlled by authorities or central banks generally. Generally, in the sense, right now, most of the central banks actually they do not focus or they do not work out with the digital money because central banks, as you know, they are mainly uh, working with some physical forms of currency or some other forms of currency like bank credit, but they do not generally deal with uh, digital money in the current context. There are some countries, I'll come back to that point, but generally central banks do not control digital money. Now, when I say digital money, probably you may have heard the term uh, virtual currencies. Have you heard the term virtual currency? Does anyone like to respond? Have you heard the term virtual currency?
Yes.
Okay. Would anyone like to give an interpretation or some definition for virtual currency? Digital money, virtual currency, are they same or different? What do you think? Does anyone have any idea?
It is an unregulated currency that only in digital form.
Okay. So which means you basically agree virtual currency is also digital money. Is that so?
Yes.
Yes. Now, if you take digital money or digital currency, that's the broad universe. Okay, broad universe means whatever we discussed, we can include under digital money. Now, virtual, I'm telling these names because we use these terms interchangeably. We have seen even students, then when they write answers, they use them interchangeably. So digital, as I said, we have already defined digital currency. So virtual currency is some form of digital currency. Now, the unique feature of virtual currency is it's not regulated or it is not controlled by a central bank. So in that sense, virtual currency are considered as unregulated digital currency or uncontrolled digital currency by a central bank. Okay, so that indicates when I say digital currency, there could be some regulated currency as well as unregulated currency. So unregulated currency we can call them as virtual currencies. So in modern world there are many countries, many computer savvy people or experts, they have created virtual currencies because it's a private type of currency. You can create using internet. If you have a computer and if you know the computer, you know how to generate computer algorithm, so you can do it very easily. So that's a possibility. Uh, now, uh, have you heard the term cryptocurrencies at the same time? There is a word called cryptocurrency. Have you heard this term? Digital currency, now we have discussed, which means in form of, yes. So virtual currency means some, unregulated digital money. Cryptocurrency, have you heard that term?
Yes, sir.
Okay, so cryptocurrency means it's a type of virtual currency, right? It's a subset of virtual currency. So which means cryptocurrency is not regulated. They are unregulated currencies. Cryptocurrencies, the name crypto means you can't see or you cannot see how that has been created. Crypto means, I think in singular, uh, you can't read it. It's like, mysterious. Gupta ekila අපි කියන්නේ. So it's like, Gupta Muda, cryptocurrency. You can't see how the computer language is written. So it's through computer algorithm you generate that money. So that cryptocurrency is actually private virtual currencies, a special type of virtual currencies that are created using the blockchain technology. You may have seen the heard the term blockchain. So it's a kind of a computer, uh, you know, uh, uh, programming and algorithm framework. Using that, you can create this money. Can somebody give me a base example for a cryptocurrency? What is the most uh, famous cryptocurrency in the world?
Bitcoin.
Bitcoin, exactly. Bitcoin. So Bitcoin, it has been created somewhere in 2009 uh, by a person called, we don't know whether it's a person or a group or a company, uh, uh, Nakamura, some person called Satoshi Nakamura. So it's created by him using the computer technology and the algorithms that you cannot, read using the blockchain uh, technology. So using this blockchain technology, uh, the cryptocurrency became as an important type of Bitcoin became an important type of cryptocurrency in the world. And if you take the cryptocurrency or the Bitcoin, their value is basically changing time to time. It's not very certain. I think at the beginning, it was, let's say, it's a very, minimum value. Bitcoin equals, let's say, $5 at the beginning. Now I think recently it has risen to more than $16,000 value. So it indicates that value is very volatile for cryptocurrency. So it's not a good sign of a, it's not a appropriate sign of a good currency. But people try to, like to use them. And not only Bitcoin, there are thousands of cryptocurrencies in the world. Probably you may have seen, heard the terms like, Ethereum, 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 Ethereum. That's a one type of a cryptocurrency or a digital or a cryptocurrency, virtual currency. There's another one called Tether. Likewise, there are a number of currencies. I think more than 3,000, 4,000 cryptocurrencies are there in the world. Most of these cryptocurrencies are created or used in the Chinese market. So that is very, popular in the Chinese market. So there are small communities in the world who are basically on the internet using these cryptocurrencies like Bitcoins. And some people, buy these cryptocurrencies as an investment asset. They would like to keep it. It's not used for transactions actually. Most people, they like to keep crypto currencies or these Bitcoins. So what I want to tell you, as I already mentioned, digital currency is a currency or payment method that only exists in electronic form, which is intangible. So why digital currency has become very popular? It is very fast, affordable. Transactions are, the cost is very less, secure, and it can be used globally. So those are the main features, or some important attributes of digital currency. And among these digital currency, as I said, there are unregulated currencies called virtual currencies. Virtual currencies are also include virtual currencies can also include cryptocurrencies like bitcoins, Ethereum, Tether. Likewise, there are different names. If you search the internet, there are hundreds of or thousands of cryptocurrencies around the world. Now, let's say the cryptocurrency or the virtual currency, for example, Bitcoin, as I said, it's an unregulated currency issued by a private player. Right? Now, let's say the digital currency is issued by a central bank where it has some regulation. So the central bank, as the money regulator, he can issue digital currency. If the central bank issues such digital currency, you can call it as central bank digital currency. In this slide, you see CBDC, CBDC, central bank digital currencies. So this is a new phenomenon. Right now, some countries, they are working on this area, central bank digital currency. What is central bank digital currency? Now, virtual currency, cryptocurrency, they are issued by the government, the private player. If the government wants to issue this digital type of money, or the central bank issues this digital type of money, you can call it central bank digital currency. Those are becoming very popular, right? Now with that, let me go to an exam question. Okay?
Excuse me, sir.
Yes.
Sir, can you talk a bit louder?
Can't you hear, please? How about others? Am I too soft? My voice? Can you hear others? Hello?
Can hear, yes, can hear.
Okay, right. Right.
Yes,
So
sir.
let me know if you can't hear. I'll try to make it a bit louder, but I think I'm using my usual tone, like some other days. Maybe some, I don't know, technical issue, but I'm trying my best to speak louder. Okay. Shall we go to an exam question? As I said, I hope you had a chance to look at past papers by any chance. If not, try to get a couple of past papers, recent past papers, to see what we have basically seen in the exam. Now, if you look at the paper 2018 semester 1, sorry, 2019 semester 1, which means March paper, 2019 March paper, you may have seen this question. Question number 3, part 1. Now, part 1, there are a lot of questions. These questions include the let's say I'm reading the first question, right? List 2 functions of money that could be served by the following instruments. Now, let's say we have some instruments. What are the functions those instruments fulfill? For example, you have credit card. What are the functions fulfilled by a credit card? Sorry, debit card. Debit card means simply you use the electronic card to access the money in your account, isn't it? You can use the debit card if you only have money in your account. Does anyone want to answer? What is the function fulfilled by a debit card? What are the functions of money, by the way? We discuss. Can someone want to elaborate on those functions of money? There are 4 functions, isn't it? What are they?
Medium of exchange.
Yes.
Store of value.
Yes.
Unit of count.
Yes. And a deferred value of payment.
Yeah.
Okay. So a debit card fulfills which function out of these functions?
Store of value. Store of value.
Yes. Correct. Any other functions?
Medium of exchange.
Medium of exchange as well. Yes. Correct. Give me a minute. I'm trying to log in from the other computer. Probably I can share the slide after that. Okay, we are back to our slide and the usual discussion. Okay, we were looking at some past papers, some related questions. So I'm just trying to recap that what we have discussed and get your knowledge into that. Check your knowledge into that. So debit card, it's a kind of an instrument that you can use to access the money in your account. And you can use the debit card only if you have money, right? For example, the ATM card is linked as a debit card. If you have money in the ATM machine in your account, if you have money, you can withdraw from the using the ATM card. Similarly, you can use that card, debit card, in a shop or somewhere, for any purchase. If you have money in your account, if you don't have money, you can't use the debit card. So debit card functions as someone of you has already mentioned, medium of exchange and store of value. Okay. Then the credit card. So credit card is a bit different. Credit card, there is an argument to say whether it's money or not. Some people say it's money. Some people say it's not money, it's only used for transactions, right? So the most favorable arguments for majority of the people agree that credit card, true, it's the instrument that you use, but the transaction created through credit card is actually creating money. So as a result, people consider credit card as money. For example, if you have a credit card, you present it to a merchant, you can buy something even if you don't have money. You can present your credit card and let's say you can buy a trouser. You don't have money in your account. So when you present that credit card, the merchant will have some link with your bank through his bank, acquiring bank, or the provider bank and the acquiring bank. There are various parties. We will discuss those parties later when we talk about payment instrument. So through that, he creates a transaction for you, and as a result, you take a loan from that particular bank to make that purchase. So by using the credit card, you are creating a loan in your accounts. So that loan is part of money. So what is the outcome of this transaction using the credit card? You are using it as a medium of exchange. Why? You are basically doing a transaction even if you don't have money. So it's a medium of exchange. And in a way, it's a deferred method of payment because after some times later, you pay, you settle your balances of the credit card. Okay. So likewise, it fulfills some functions of money. A check, we discussed last week, a check is also an instrument. Check is coming out of your current account or the demand deposits. So even though the check itself is an instrument, it is used to generate transactions. So when you use a check, that is creating new money, because if you present a check to someone, that person will go and deposit that check in his account. So when the money is realized, that money is generating more transactions. So when we come to money creation, you will understand. So it is actually one of the basis for money creation. So that is also a part of money if you use a check. So what are the transactions or the functions of money fulfilled by a check? Can someone answer? If you use a check, what do you do actually? What are the functions fulfilled? Medium of exchange, correct? What else? We can use checks for deferred payments, isn't it?
Deferred payment. Standard for deferred.
Standard for deferred payment, correct. Bitcoins, we just discussed. Bitcoins is a form of virtual money. For which purpose you can use Bitcoin?
Store of value.
Store value, excellent. Yes, you can use that as a storage of value. If someone wants to keep money for future storing, you can use Bitcoin. And also that can be used for transactions as well. So it's a medium of exchange. The last question, e-wallet. E-wallet means some form of digital transaction. I'll come back to that point. I have a bullet there. So e-wallet is also used for medium of transactions and store of value. So this is one of the questions that you have in 2019 March paper. Question number 3.1. 3.3 is also an important question. If by any chance did you get a chance to look at the past papers? Do you have the past papers with you now?
I think it's have with our PDF. I think. The last
Sorry. Let me check your chat box to see what you are saying. No, most of you, I think you don't have the past papers. Why is that? It's not, basically available with the IBSL yet. I don't have any idea about that. Why do you say that you don't have the papers? still I think it's not available in the in your account. That may be the reason. But don't worry, you will get it in the near future. And also, I will be basically using some of these questions uh, from the past papers. So, do you want me to read out that question earlier, what I have mentioned? If you are taking any notes, do you want? Yes, okay. That was actually Survey of Financial System exam, March paper 2019. So we have 2 cycles. So that was March 2019 exam. Question number 3, 1. The question I basically discussed right now. List 2 functions of money that could be served by the following instruments. Most of these questions I think I have added into your slides. So if you look at the latter part of your slides, you will see these questions. But if you really need, you can take a note. These 2 questions, 2 functions of money that could be served by the following instruments. So we discussed 5 instruments: debit card, credit card, check, Bitcoin, e-wallet. Okay. Question number 2 there, I'm not going to cover right now because I have not gone that far. Maybe a week after we can talk about that part. But question number 3, the third part of the question, I'll read it for you. Compare and contrast. Compare and contrast cryptocurrency. Cryptocurrency, I think word cryptocurrency I already discussed. It's in your slide, so I'm writing it on the chat as well. Cryptocurrency and normal currency, that is notes and coins. Compare and contrast cryptocurrency and normal currency. So that's an exam question where you get 5 marks. So what are the points of comparison, and what are the points that you can see some contrast between cryptocurrency and normal currency? Would you like to, raise your voice? Can someone give me an answer? Why, there is a difference between cryptocurrency and normal currency? Sorry, can you repeat it, please? So that's Pratibha, right? I can see your name, but actually I was not so sure what you have mentioned. But given the interest of time, let me, go into, okay, to secure transactions. I see some answers on the chat box.
Cryptocurrencies cannot be used to pay taxes, but normal currencies can be paid for taxes.
Exactly. Yeah, correct. Cryptocurrencies and normal currencies, how do they differ? Now, I see one answer here. It's a similarity. Cryptocurrency and normal currency can be used to do transactions. Secure transactions means you can perform transactions, basically what I mentioned from what I understood from your answer, that you can use for transactions. Now that is common. Cryptocurrency can also be used as money. Normal currency can also be used as money. Now there are some important differences. One already mentioned, I think. Normal currencies can be used to pay taxes because tax has to be paid you have to be, you cannot be anonymous when you pay taxes, right? You have to be identified because you are paying tax to the government. Government should know that who has paid this tax. So when you pay taxes, most people they use, cash, notes and coins. But cryptocurrency, you cannot use for paying taxes. So that is one of the differences. I see some answer from Yoshini, a cryptocurrency form of digital or virtual currency that work as a medium of exchange. Correct. Cryptocurrency is a digital form. In digital form, uh, physical currency or notes and coins is in physical form, right? So in that sense, cryptocurrency is not tangible or virtual. They are virtual, but normal currency it's tangible, right? You can simply see and use it or touch it. What is the most important difference between those two currencies? Type of currencies. Normal currencies are issued by the government, isn't it? Normal currencies, they are issued by the central bank, the government. But for cryptocurrencies, I already mentioned to you that it is not backed by the government. There's no government behind cryptocurrencies. Maybe the government has some involvement in digital currency, not in crypto. Because governments are not issuing crypto. They might be issuing digital. I have a question for that. Let's come back to that. So that is one of the differences. So to be clear, one is normal, the government involvement. Time making it clear. Government involvement means cryptocurrency is not backed by the government. Normal currency is backed by the government. And someone mentioned the tax matter. Cryptocurrency cannot be used to pay taxes. Normal currency is used for taxes. Now, another important point is about the legal tender. Legal tender means money should have the feature of acceptability. Acceptability. So, which means money should have the legal tender. For example, let's say a 100 rupee note, it has acceptability. So it got the legal tender. Why? We use it for transactions. People accept it. So in that sense, normal currency and notes and currency, they are used as legal tender. But cryptocurrency, there's no such legal tender. Maybe people are using it for transactions, but there's no such legal tender because it is not given the legal status by the government. And fourth factor, I already mentioned, tangibility. Normal notes and coins, you can have it in physical form, but cryptocurrency, they are available in virtual form or it's in computer only. Okay. So you can say that demand and supply could also use matter for these currencies. Now, for normal currency, demand and supply, sorry, I see some of your answers. I'll come back to that. Demand and supply. For normal currencies, demand and supply is controlled by the government. For cryptocurrencies, demand and supply is controlled by the computer. So the computer algorithm means the language it has been written. It decides the value of cryptocurrency. So if you see huge demand is coming, or if you see some need for supplying cryptocurrency, that job is taken by the computer, not by a physical institution or a person. Okay. Number 6, storage. Cryptocurrency is stored in the cloud or a computer. Normal currency is stored in a vault or in a wallet. Vault or wallet, right? But virtual currency is in the computer. So likewise, you can have some differences. There are some important answers given here. Let's look at these answers as well. Isuri, huge cloud used to normal currency, but cryptocurrency used less. What do you mean by huge cloud use for normal currency? Cloud is basically the storage, right? So it's the cloud is used actually by the cryptocurrency, isn't it? Probably what you are saying is for normal currency, you need some physical space to store. Now, if you go to the central banks have large vaults. Vaults means where you store money. So there are huge or massive amounts of notes and coins stored in the vaults. So that needs huge space, and you have to incur a lot of cost, maintenance, security, a lot of issues. You have to print it. That is also a cost. In that sense, your answer is correct. But cryptocurrency, you only need the virtual space as the storage. But some people say the cryptocurrency, the cost of mining is huge. To mint a coin, you are spending some less amount of money, actual physical coin. But to mine a cryptocurrency, you need significant cost because it has to be run on the computer for many hours. You have to invest so much of knowledge for that matter. So as a result, people say the mining of cryptocurrency is costly. People use, now as I said, notes and coins you print or mint. Coins you mint. Notes you print. Okay, that's normal currency. Crypto, sorry, what you do is mining. So if you are issuing cryptocurrency for the first time, people say ICO, initial coin offering. So which means coins are mined and offered. Okay, so those are some differences. And I saw some important answers somewhere here. Okay, Kaushala. Normal currency is easy to use without having any knowledge. Correct. You simply use, anyone can use normal currency. Even people who can't read, who doesn't have some literacy, can use cryptocurrency as a normal currency. Right? Even a blind person can use a normal currency. Right? In some countries, when people uh, manufacture notes and coins, they use some special features for the benefit of blind people. But even for them, normal currency can be they can use normal currency very easily. Whereas cryptocurrency, you have to have some knowledge. You need to be some computer smart person. That's true. Another answer: digital currencies have a central authority. Yes, we discussed. But crypto can't do that. Yes, this is actually Hirusha or Hirusha should be Malik. What you have compared here is digital and crypto. In that sense, the answer is correct. But our question is basically on normal notes and coins and crypto. Right? Crypto is not legal tender, correct? It's not backed by central government or bank. We discussed that. Yes, correct. We can use cryptocurrencies to international transactions. That is correct. But even notes and coins, we can use for international transactions. Not all notes and coins. There are some currencies, I used this term some other day, reserve currency. Reserve currencies means those currencies are accepted anywhere. Dollar, sterling, euro, yen, those are considered as reserve currency. So those have some international acceptability. But I agree with your point. If you want to do an international transaction, you can't take it physically, physical notes and coins, right? So you have to use some electronic media for that matter. So in that sense, the cryptocurrency is much advanced for that purpose. Yoshini got an answer: with regular currency, you must trust someone else to hold your funds for you and process your transactions for you. With Bitcoin, it is like cash in your pocket. You are only person responsible for safekeeping. You are only the use process of transaction. Yeah, that is correct. Because you can have your account in your computer. Yeah, you can download the money into your computer. In that sense, your answer has some validity. So again, what you are saying is notes and coins have less security, whereas cryptocurrency have more security, which means they are much advanced. But then again, since we are in cyberspace, that is also not guaranteed, because there are a lot of cyber issues going on, and a lot of computer hacking is there. Even the cryptocurrency can be stolen. We don't know. 100% safety is not there. Pratibha is asking the question: could someone repeat the meaning of ICO? ICO means initial coin offering, which means for the first time the cryptocurrency is manufactured. We call it mining. I already typed this. Mining means in the computer you run this program to create the money. That is called computer mining and initial coin offering. Okay, I hope it's clear. Vijay Chanika, they are global cryptocurrencies. Yes, normal currency located in specific country. That is correct. But as I said, some of the currencies are, that can be, those currencies can be used globally. I think we had a very nice discussion, active discussion. Most of you got some nice answers. Thank you for your active participation. So there is one question related to this area where you get 5 marks. Quickly, let's jump to another question in September 2018 paper. September 2018 paper. Now also you have an important question related to this area. Sorry. In question number 3, actually the first and second questions I'm not going to discuss here. First question, explain the key functions of money in present day economy. I think we already know what are these functions. Medium of exchange, value of medium of value, likewise measure of value. We discussed those. Question 2, compare gold standard with modern currency systems. I think we had a discussion on gold standard last week, and we looked at what is meant by gold standard, and from that we can understand why it is different from modern other currency systems. Let me take question number 3, that is important. Briefly explain, I'll type this word, briefly explain decentralized cryptocurrency. Decentralized cryptocurrency and digital fiat currency. These two terms we are actually using in this course for the first time. Decentralized fiat currency, digital fiat currency. Sorry, decentralized cryptocurrency, digital fiat currency. It's not anything new, basically what we have discussed so far. How do you answer that? Now, decentralized cryptocurrency means we already discussed cryptocurrency or virtual money. And I told you those virtual money or cryptocurrency are issued not by the government but by the private players. So private players means you don't have a central control. The control is decentralized. So the issuers are decentralized. They are everywhere. It's not only one person. There are various persons. There's no central authority to issue this currency. So you can say, according to the marking scheme, a decentralized cryptocurrency is a digital asset designed to work as a medium of exchange that uses cryptography to secure financial transactions. Cryptography means how this money is created. The relevant science or the technology used for cryptocurrency, you call it cryptography. So using cryptography, you generate these currencies. Why you call it decentralized cryptocurrency? They have decentralized control as opposed to central currency systems. Okay. So these are issued by different people. How it happens, as I already mentioned, I think you have some idea. We are talking about some new technologies in the modern world, blockchain technology, distributed ledger technology. Those are some, computer related programs or, frameworks. Using those, you can issue. So even you can do it, right? if your virtual money or the cryptocurrency is accepted by a society, you can do it. But in Sri Lanka, cryptocurrency is not permitted. The central bank has issued guidelines, directions on that. In Sri Lanka, you cannot use, you cannot create, you cannot buy these decentralized cryptocurrencies, which means virtual money transactions are prohibited. So what's the best example for decentralized cryptocurrency? Let's see whether you have your memory very clear, understanding. Can anyone give me an answer for a decentralized cryptocurrency issued by private players? Yes, Asma. Does it mean that it's illegal in Sri Lanka? Yes. Using cryptocurrency in Sri Lanka is illegal. You can't use. Central bank has issued a press release on that as well. Sometimes back, maybe last year, 2 years back. What is the best example for decentralized cryptocurrency? Either yes. eBay, Alipay, eBay is a payment gateway anyway. Alipay is something like an e-wallet. I'll come back to that. Bitcoin, yes. Those are some examples. And if you search the web, you will find more than 4,000 cryptocurrencies. Could you please repeat the definition of decentralized cryptocurrency? Sure. Yes. Decentralized cryptocurrency means the digital currencies issued using cryptography by private players or not by a central authority, using blockchain technology or distribution ledger technology. The point is, these are digital currencies, but not issued by an authority. That's why you call it decentralized. The idea decentralized means you are not, having a central control. Okay. Clear? Got it, Pratibha? Do you want me to repeat it? Yes means clear, or you want me
Yes.
to repeat? Okay.
Yes,
Clear.
sir. Thank you.
So very simply, as I said, it's not issued by a central authority. Okay. Private players are issued. Then what is digital fiat currency? Can somebody give me an answer? We already know digital, the word digital, and we know digital currency can be issued by the private players as well as the government, right? Government can also do it, although governments are not doing right now. Most of the government, they are not doing right now, but even the government can do it. So why do you say digital fiat currency?
It is a digital form of fiat money.
Digital form of fiat currency, correct. What does that mean? Digital.
It is that currency is established as money by the government or regulation.
Exactly. That is the government control money, legal tender. In other words, yes. Now the governments are issuing notes and coins. No? Those notes and coins can be issued in digital form. If the government issues that in digital form, that you call it as digital fiat currency. Exactly, you got the point. So let me read the definition in the answer sheet, the marking scheme. Okay. Digital fiat currency, or you can call it central bank digital currency. Remember in my slide I have this term CBDC, remember? Central bank digital currency, which means digital currency issued by the central bank, supported by the government law and order. Right? So the government fiat, the fiat word, remember, the fiat means the government order, government authority. So if the government authority is given and issuing the money in digital form, it is called digital fiat currency. Now, as I said, even now, most of the governments or countries, central banks, they are not issuing digital fiat currency. But some countries, they have already, looked at the possibility of issuing digital fiat currency. One example is Bank of England. They have, considered whether they can issue digital fiat currency. I remember Bank of Japan, the central bank in Japan, they have also considered issuing digital currency. One bank actually, they have already done it. Can someone give me an answer? So this is, kind of a general knowledge. Who wants to be a millionaire? Who has already issued digital fiat currency in the world? China, actually, they are also looking for the possibility. The Chinese currency is not accepted as, digital currency yet. But they are trying. And I have heard in some parts of China, in some provinces, they are, issuing these currencies. But maybe you cannot call them as the government-led currency. But there are a number of thousands of private currencies in China, digital currencies. Isuri, sorry?
Marshall Islands?
Can you repeat, please?
Marshall Islands?
Dina, I'm not so
Marshall
sure.
Islands?
Yeah, I see you answer here, Dina, but I'm not so sure whether they have issued. I'm not aware actually. But there's a major country. Some of you have already mentioned USA, UK. As I said, UK, they have tried. They are, in the process. And I think they have a project. I can't remember that project name. That is a successful project. I think they have almost issued digital currency. But there's one famous central bank in the world that they have done it. And they are using it actually. In that country, I think now physical currency it's phasing out. I mean getting away from physical currency. Kiran, Switzerland. It's not Switzerland, but I think most of you are getting closer. Can we try a final answer? Okay, we have few answers, 3 answers. Sweden, Norway, Netherlands, Norway, Canada. Maybe you are right, I don't know Canada, but I'm just looking for the most famous example. Who wants to lock your answer? Does anyone want to lock your answer? Final answer as the final answer. Can we see one more answer, then I'll give you the answer. Krishna, Japan. As I said, they are also looking at trying to. Tiluka, Germany. I see this answer. Someone has mentioned Prativa. Sweden. Sweden is the correct answer. Maybe you are right. I think Germany, Canada, maybe they are in the process of issuing digital currency. Some of them have already issued. But as I said, the most striking example in the world of digital fiat currencies, Sweden. Sweden, what is their currency called? Swedish currency. What is the name of Swedish currency? Krona. Exactly. So Sweden central bank, Swedish central bank, we call it Riksbank. They have already issued a digital currency called e-krona. It's in use. Riksbank of Sweden. Yes, they have Riks in the sense you write Riks like this. R-I-K-S. Okay. You're right, but we write it differently. Riksbank. So Riksbanks, they have issued e-krona, which means electronic krona, means a digital form of legal tender. So in Sweden, even the small kids in schools, they are actually using these digital cards, and they have predicted, I don't know in which year, the usage of digital currency will exceed the use of physical currency and electronic krona. Yes, Pratibha, it's okay. I really appreciate your answer, but I'm trying to, give you the most correct thing. But your answer is perfect. Thank you. Electronic krona. Okay. Or e-krona. They use the term like a trade name, e-krona. Right? So that is the world's most famous example for digital currency. So this question is in the 2018 paper, as I said. There's another question. I don't know whether you can answer this part, but I think from general knowledge we can, basically give some answer. The part 4 of this question explain how the generally accepted objectives of a central bank will be challenged in an economy where decentralized cryptocurrencies play a significant role. Yes, can you please define cryptocurrency in simple terms? So simple terms, how do you define it? Cryptocurrency means it's a type of digital currency, or specifically a type of virtual currency issued by private players. That is the most important aspect of cryptocurrency. Using a system called, or a technology called, cryptography. So cryptography means it's nothing else. It's using the computer language algorithms. So probably we can form a definition to say a cryptocurrency is computer generated, privately owned virtual money. Is it clear? Okay. So this question asks, if there are cryptocurrencies or decentralized virtual money, how the central bank functions will be challenged. Now, it's a bit early for you to answer this question, but I think if we were able to complete the next 2 sessions, you might have some answer for that. Central bank's main role is to secure price stability, which means to ensure low inflation in the economy. So when the central bank wants to ensure low inflation in the economy, the central bank needs to control money supply in the economy. So that is one of the major tasks of the central bank. They want to control the money supply of the economy. Because money is fueling inflation, money is driving inflation. So if the central bank wants to control inflation, they want to control money supply. So if the central bank is issuing money, notes and coins, for example, they have the ability to control it. Okay? But if there are private players issuing money as virtual currency or cryptocurrency, the central bank might lose the control of the total money supply in the economy. The total money supply now, it is supported or basically contributed by private money as well. So that part you cannot control. That could drive demand for goods and services, additional demand for goods and services. As a result, the prices in the economy could go up. So the central bank function of money issuance, the central bank function of controlling money will be challenged due to this private issuance of digital money. That is the main concern. So when we discuss going forward, you will have some more idea. But right now, for the time being, you have some reasonable understanding. So are you clear about this digital currency? Because I spent some time in every paper recently, we have a question on this. Because this is going to be the future of money, digital currency. Right now, the majority of the digital currency in the world is issued by the private players. But going forward, that function will be taken by the central bank. Remember in in the 17th century, what happened in UK, right? What has happened? The goldsmiths, they issued private money, remember? That function was taken by whom? By the central bank. So similarly, my prediction, and also many, experts, they predict the digital issuance of money will be taken over by the governments in the future, because now it is in private hands. Clear? Can we wind up that discussion? Digital money and cryptocurrency. Okay. Now let me go back to the slide. There's one more point here which we didn't cover. I think CBDC, now it's very clear. CBDC means very clearly the fiat currency. So if you are not so sure, I will write it here. This is digital fiat. Digital fiat. Okay. So when we talk about digital money, there's another type of money that we see in current countries. That is digital wallets. Sometimes you call it e-wallets, electronic wallets or digital wallets. What is that? It's an electronic device or an online service allowing you to make electronic transactions. Could be an online device, or it could be an electronic device, or it could be an electronic service or online service allowing you to do some transactions. For example, you may have heard the term this QR code. Somebody typed there, I remember, Alipay, Apple Pay. Those payment mechanisms, we consider them as digital wallets. So Apple Pay means it's provided by the Apple company. Alipay means it's provided by the Alibaba company. There are some other, payment types. Google Pay by the Google. Samsung Pay is there by Samsung. QR code is simply, you are scanning that QR code to make the payment. Likewise, these are some electronic methods that you can do transactions using your bank accounts. But some of these e-wallets allows you to download money to your computer and make a payment directly. For example, if you have this one of the pay methods, let's say Apple Pay, you can download some money to your account and you can use that money for a direct purchase through the online. So that is another type of transactions or payment mechanisms that we have in this digital world. Now there is a question in 2019 September paper, if I remember, yes, September paper, that's on these digital wallets. So I'll read that question for you. The question is, list 5 examples of digital wallets. 5 examples of digital wallets used for payments and accepted merchants globally, and explain it. So I already mentioned to you some of these methods. What are these digital wallets? QR code. So QR code, as I said, it's a kind of a contactless payment that you can simply scan a QR code using a mobile app. That QR code is generated using some language, computer language, and you can use that for your transactions. Even in Sri Lanka last year, we introduced this QR code. So it makes very easy. Your transactions become very easy if you use the QR. And also, as I said, you can use some type of computer payments like Google Pay, Apple Pay, Alipay, Samsung Pay. All these are digital wallet platforms provided by these companies. Okay? And also, probably you may have heard the term phone pay. Right? Even the mobile phone can use as a digital wallet. In some countries, I remember, I think the famous example is from Africa. In Africa, this mobile money has become very famous. Mobile pay. So they call it M-Pay, which means to bring the people in the periphery where you don't have banking facilities. They are using this mobile technology and internet for make their payments. You don't need a bank actually. So in Kenya, it's very famous. I think that money you call it Mumbaza money, if I'm not mistaken. Mumbaza money, M money, which means it's mobile and the internet only. So on the internet, you have your account. You link to your bank through the internet. Through the mobile, you do the transaction. You can buy anything through the mobile. Do a transaction. So that is also a type of a e-wallet. There could be many more e-wallets. If you look at the Google and if you search in many countries, there are a number of e-wallet methods in countries. So all these are developments of payment technology. Let's move to the next slide. I think we have some very extensive discussion on digital methods. Types of money. I'm simply dividing types of money as physical money and implicit money. Physical money we already know. notes and coins that can be used for transactions. Implicit money means some payment methods or money deposited in financial institutions. Physical means they are actually direct money. Implicit means they are not direct money, but it serves as money. If you look at bank deposit, credit card, debit cards, digital money, all these are not they are not money as physical money, but it serves the purpose as money. So you call them implicit money. So that distinction you should have some idea. And some people have some these words, terms used in their books and in literature. Money substitutes, near money, quasi money. What I have mentioned in this shaded area, they are actually not 100% money. They are not 100% money, but they are very close to money. For example, bank deposits, government securities, they are not liquid as notes and coins, but highly liquid. Right? So if a particular monetary asset is highly liquid, closer to money, you can call them as money substitute or near money, quasi money, whatever they do. Now, this slide is very important. Why? This was an exam question. Characteristics of good money or a monetary system. What are the main features of a good monetary system? So this gives an answer if a particular monetary system should be to be acceptable as a good system. We should have these characteristics. For example, I have simply presented some examples here: a rupee and a dollar. A rupee and a dollar, they are not equal in terms of value. So if you take the value, it's not equal. But if you take the characteristics, it could be equal, right? So what are these characteristics? First one, good money should be generally acceptable, which means in a given society, as I said, everyone should accept this monetary unit. The rupee is accepted in our society. Even if a foreigner comes to do transactions, he has to get his money converted into rupees. If you take a dollar, that is accepted by generally. As I said, a dollar is accepted actually globally. It's not general acceptability, global acceptability, because it's a reserve currency. So that acceptability is the most important factor deciding good money. It should be accepted by the economy or the society community using that money. Okay? Stability. Stability means the value of money should not change drastically. The value of money can change over time, but it shouldn't change drastically. Now, compared to a dollar, a rupee might have less stability. Dollar is a very stable currency, but rupee could be it's volatile, its value. But we can say it's a fairly stable currency, a rupee. Why? In the world, there are worse currencies. I'll show you some slide when I come to monetary policy discussion. Countries like Venezuela, countries like Argentina, countries like Zimbabwe, their money does not have stability. Their value is changing very drastically. What decides the stability of money? What is the key factor behind stability? Does anyone want to answer?
Inflation.
Inflation, exactly. Inflation erodes the value of money. So if a country is having a high inflation, Zimbabwe is having millions, billions % inflation. So they were basically experiencing very unstable currencies. But if you look at our country, our case, we have seen some high inflation periods, but we have never experienced 50%, 100% inflation. So in that's why I said we are a very, fairly stable currency. In US, inflation is always 2%, 3%. In Sri Lanka, we had some high inflation periods in the past, but now mostly inflation is 5%, right? So it is relatively a stable currency. So it's a sign of a good currency. Scarcity means money is not available in abundance. Money is a scarce resource. I use in my class this singular word, salli, money. You cannot have possata and gassata. Right? It's not that abundant. It's a very scarce resource. Why is that? The scarcity is there for a purpose, intentionally. If you have money in abundance, that drives demand pressures in the economy, inflationary pressures in the economy. So money should be available in the economy up to the required level, not too much, not too low. Okay. Portability. You need to transport it very easily. It shouldn't be very heavy. It shouldn't be very large. I'll give you an example. In Sri Lanka, sometimes back, there was a large currency, 2000 note. Some people say this currency is not, a good monetary unit because it's huge. If you put it to a wallet, that comes out from the wallet. So it's not portable. In the past, some of our currency coins, they were very heavy. I remember there was a coin, 5 rupee coin. It's very heavy. There's a 2 rupee coin, very heavy. Cannot transport very easily. So, in order to improve that, you have to modernize, or technologically you have to improve it. Portability. Durability, again, you should be having some reasonable lifespan for currency. Now, when currency notes and coins goes out, it circulates in the economy, and that comes back to the central bank when it becomes unserviceable. So notes, we know every day we see, notes are, torn and, damaged. But it can happen when the money is used, but at least there should be a relatively longer lifespan. If you are required to, replace currency in every hour because of the bad quality or less durability, it's a problem. So there should be some reasonable lifespan of currency. Divisibility means you should have small amounts, and we know even for rupee, even for dollar, there are small amounts, right? Cents, pennies, likewise. Recognizability or cognizability, recognizability or cognizability means you should be able to identify currency very easily. So even among any other materials, you should be able to recognize currency because it's a scarce resource. If you abandon it due to non-recognizability, that will affect the stock of currency. And also, in order to speed up the transactions, you should be able to recognize currency very easily. Recognizability means, for the transactions, to support the transactions, you should be able to detect it very easily. Homogeneity or uniformity, similar currency notes or similar currency denominations should have some uniformity. Now let's say if you take this 1 rupee coin, if these coins are many sizes, one is this size, one is this size, one is this size, likewise, what will happen? It becomes a problem. So you should be able to detect as equal units or uniform units. That is meant by uniformity. Very quickly, I want to finish this part today. Money printing. The term money printing means when the central bank issues money to the economy, you call it money printing. Now, when we say money printing, what comes to our mind is, simply printing money in the machine. Now, all these notes or money printed in this machine is not printed money. It's very confusing, but what I'm saying, what you print in the machine or in the press, the entirety is not money. So money printing means when the central bank issues money to the economy, new money, that we call as money printing. So whatever you print, the entire stock can be in your central bank vaults, right? So until it remains in your vaults, it's not money. If it comes out from the vaults and issued as new money, then it becomes money printing. When the central bank does this, how it happens? Central bank.
Excuse me, sir.
Yes.
Can you explain it again?
Yes. Now, what I'm saying, now notes and coins are manufactured in the press using pulps and metal. You manufacture, and that entire production is not called money printing. That entire production, you produce it, and that goes to the stores. Vault, you call it vault. In the vault, you keep that money. So until you keep that money in the vault, it's not money. If that money is issued to the economy as new money, then you call it money printing. So issuance of new money is money printing. Clear?
Yes, sir. Thank you.
Okay. So how does the central bank issues this new money? Central bank cannot simply put new money into the economy. Now let's say tomorrow the economy needs 10 billion rupees. The central bank cannot take money out of its vaults, transport to the economy and drop it. It can't do it. It does by purchasing financial assets or making some loans to the economy. In the next session, money supply, I am discussing this in detail. Then you will have some understanding. What I am trying to make a point here is the central banks are issuing money by way of certain operations. That is the point I want to highlight. Through the operations, central bank is releasing new money into the economy. So whatever the print, it's not the money issued. Okay? The total printed quantity and total issued quantity could be different. So the issued quantity is the actual money printing. Is what I want to highlight. Next point, price of money. Price of money means simply the interest rate. The cost of money. Sometimes we call it price or the cost of. So the cost of money is simply the interest rate. So for usage of money, If you want to use money, someone's money, you have to pay a price. The price is the cost, interest. Now, if you are borrowing from a bank, you are paying a price. You are paying the cost of that money. Precisely in economics, you call it opportunity cost, which means if the bank is not giving a loan to you, that money could have been used to someone else for something else. That is the opportunity cost. So that opportunity cost actually paid by you as the interest. Okay. So price of money, very simply, the interest. That is what I want to highlight. Last point I want to highlight is, like any other goods or service, money also has a demand and supply. Supply of money, I'm going to discuss next week in detail. Demand for money, it's a theoretical concept, right? Theoretical concept, but it's important to understand. Why? People demand money for various purposes. You call it liquidity preference. People demand money for liquidity purpose, liquidity preference. Okay. Now we know when people keep money in money form, that doesn't pay any interest, doesn't it? If you have cash in your wallet, does anyone pay you any interest? It's in your wallet. No interest is paid. But still, you would like to keep some money with you. That we call as the demand for money or liquidity preference. Theoretically, this liquidity preference has been explained by some, well-known two economists in the past. Irving Fisher, he is a US economist, and Keynes, John Maynard Keynes, he is a UK economist, British economist. These two uncles have explained this liquidity preference or demand for money in the past. Why people keep money. Now, Fisher, the first person, this person, we call him as Irving Fisher, very famous economist, US economist. His theory we call as classical theory of money. What he said is, people keep money as their income increases. So when your income rises, you will keep some money with you. So that is his key argument. And he also mentioned one of the important things. He said, money is a function of your income, right? That is the first thing. Second thing, he said, money has a relationship with prices. In this equation, M means money, V means money velocity. V means money velocity means speed of circulation, very simply. Don't worry, I'm coming back to that in the next week as well, but I'm just simply mentioning here. Right? M means money, V means velocity, speed of circulation. P is the price, Y means the income. Right? So Fisher mentioned this V and Y are constant. They are not changing in the short run. That is his argument. So what is remaining is M and P. So when M increases, P would increase. So the idea is when money supply increases, prices would increase. So under this Fisher's theory, the first theory, quantitative theory of money, he said money is a function of income and money is driving prices upwards. Okay? That is an important discussion that we can draw out of this demand for money discussion, right? Second argument was presented by Keynes, this person, Jordan Maynard Keynes. He's a British economist. He said people demand money for three reasons. What are these three reasons? So this part is important. I have seen this in your exam as well. People demand money for transactions, right? For your day-to-day work, you need money. For day-to-day purchases, you need money to buy a pen, to buy a lunch packet, to travel, to pay to your bus. You need some money. So people keep money for that purpose. Precautionary motive means for unforeseen events, you keep some money. I know every one of you will have some money kept for some, unforeseen, unexpected event. Let's say you falling sick. You need some extra money. So that is not in your wallet maybe. Maybe you have kept somewhere else. Maybe under your pillow or maybe under your bed or the mattress, right? Somewhere else in a safe custody. Or in the past, have you heard this term muttikasi? Right? Where means you keep that in a pot. Now you have different alternatives. But people keep money for precautions. Okay, that is also. Now the good thing is, good in the sense, the main thing is this demand for purchases and precautions have a positive impact with the income. When income rises, the demand for money under these transactions would rise. Now, for example, you have 1,000 rupees today as your income. You have a certain demand for transaction, certain demand for precautions. Let's say your income doubles tomorrow, goes to 2,000. Now the amount you keep for transactions and precautions would increase. So it has some positive relationship with income. Okay. Third motive, speculative motive. Speculative motive means people keep some money for future investment purposes, thinking that future financial opportunities would be there. You keep some money to invest, in other words. That has a relationship with interest rate actually. But with the interest rate is a negative relationship. So if interest is high, you don't keep money with you. Why? You can invest now. Because later interest could go down. If interest is low now, you might keep some amount of money thinking that you can invest later. Okay? Clear? People keep money for their liquidity purposes. Liquidity purpose is dependent on, according to Fisher, income. People, income will drive their demand for money, according to Fisher. And also he said, money has a positive impact on prices. Then Keynes said, people keep money for various purposes: transactions, precautions, and speculation. So I think this gives some idea why people keep money for various purposes. And as their income increases, that would increase. As the interest increases, that would decrease. So in this slide, I have summarized some factors. So what are the key factors affecting the demand for money? People's income and interest. This one actually third one, extra one, expected inflation. Maybe it's a bit complicated for you to understand, but at least you need to understand the first two. People keep money depending on their income and interest level, right? So I have summarized that argument for the discussion in this highlighted area as well. For the with the transaction motive, money has a positive relationship with income. Positive. For precautions, money have a positive relationship with income. For speculation, money have negative relationship with interest, although there is a positive relationship with income. Because when income rises, we keep some money. But if interests are rising, we might reduce that amount that we keep with us. Okay. Okay, with that, we are done for the day, and there are a couple of questions in these slides. And as I said, if you don't have the exam papers with you, but you have the exam questions given here relating to these discussions. If you look at these questions carefully, you will see those are very much related to what I have covered. Even, let's say, I discuss implicit money today. Here we have a question on that. So try these questions as you can answer as much as possible, depending on your knowledge. The questions I have compiled here are basically from the current discussion. So you should be able to answer these questions. So try to answer if we have some time. But at least try to review these slides and listen back to the videos if you are not so sure. Do some homework. Okay. With that, I think we can conclude for the day. Now, next week, probably I might have some change to the class because next week we have a revision class for the ongoing exam cycle. So that revision class has also fallen on the same day. Let's see whether there is a change. But IBSL will communicate with you if there is a change. Tarshana has shared some link here. IBSL.lk docs forms model answers request. So what's that? Is there a... All right, okay. You have to make a request, I think, to get the answer schemes. I think that's a kind of a link and a PDF document that you can follow up if you want to purchase. Right. So shall we conclude for the day? I'll let you know the plan for the next week. And if there's a change, it will be communicated to you. But still, whatever the communication I do, it doesn't matter. You have to do some work, please. Since we are not meeting physically, I don't see you. I only see some nice photographs of you. I'm not so sure whether it's you or someone else, but assuming that's you, please do some work, right? Even though we don't meet physically, I really request you to do some work depending on your time schedule and also based on the materials that I cover. Okay, right. Let's stop here and have a good weekend, and I'll see you probably next week. If not, we can't. Okay.